Party across the week. But here's one sector that was strongly in focus. That's the banking sector. And this is perhaps why the Monetary Policy Committee has kicked off its two-day meeting. The interest rate decision will be announced tomorrow. Now, there's little or no hope on the land street that rates will be eased, but many are watching out for ways in which RBI could drain the excess liquidity in the system after demonetization has hit the market. Ritu Singh is here with a poll among top market participants and what they are expecting. Ritu, what has your poll thrown up?
Well, more than any rate cut or hike, the top thing on the market men's minds will be any action that the RBI takes on liquidity. Remember, for two important reasons. There is surplus liquidity parked in the banking system in the wake of demonetization. How much of that liquidity will RBI allow really banks to hold on to, and for how long is the big question. Remember, because keeping excess liquidity would mean it could fuel inflation in future. So therefore, almost 100%, actually all respondents to our poll did say they do not expect any rate action on this account, especially coming after the fact that the governor did change RBI's policy stance to neutral in the last policy from accommodative earlier. In fact, for the whole calendar year, we asked our respondents if they see any rate action at all, and 80% of them said they do not see rates moving anywhere as far as this calendar year is concerned. Will the RBI then use the CRR route to drain out this excess liquidity? Well, 90% of the respondents don't think so, but 70% believe that the standing deposit facility may be introduced at a rate which is slightly higher than the reverse repo rate at 5.75% currently to really drain out this excess liquidity. As far as the macro parameters are concerned, the majority of the respondents did believe that the RBI will maintain its FY18 GVA forecast at 7.4% and the CPI inflation target at 4 to 4.5% for the first half of this fiscal. But also, very importantly, they'll be watching out for any NPA-related measures that RBI may announce. A majority of them are, in fact, expecting some NPA-related announcement in tomorrow's policy. And lastly, as far as the liquidity stance is concerned, but obviously, nobody is expecting any change in stance to accommodative. It remains neutral.
Okay, fair enough.